Hello and welcome to another episode of Pakistonomy. We've talked about economic progress and critical issues related to promoting economic progress in Pakistan from a structural reforms perspective. But there's a lot of research in Pakistan around the world that when you promote access to finance and promote financial inclusion writ large in society, not only do you promote the well being of households, but you generate greater economic growth, more sustainable economic growth, and economic growth that leads to formalization of the economy, which is great for a country like Pakistan, where a large chunk of our economic activity is still informal in nature. So, to talk about this topic and how financial inclusion, growing financial technologies, and overall policy landscape and how it's changing in Pakistan, I have with me Mr. Nadeem Hussain. Nadeem Hussain Saab is the founder and CEO and president of Tameer Micro Finance Bank, which is Pakistan's first private sector microfinance bank and is a world leader in branchless banking. His bank has reached out to over 10 million people in Pakistan and extended credit to them and mobile banking services. So he understands this sector and understands the importance of this sector in terms of promoting financial inclusion. So, Nadeem Saab, welcome to Pakistonomy.
Thank you very much.
I want to start with this issue that
So
I've
just
always.
a
Yes, go
little
ahead.
clarification. I was the founder of Tameer Micro Finance Bank, but I sold the bank close to 4 years ago. So I'm no longer the president and CEO of Tameer Bank. However, after exiting from Tameer Bank, I created Planet N. Planet N is a holdco that invests in tech disruptive companies, and now we have 26 companies under the Planet N umbrella.
Thank you. Thank you for that clarification, Nadeem Saab. And so I want to begin with sort of my question that I have in terms of where Pakistan's financial space is right now and the industry is right now. One of the critical things around the world we see is that a digital ID program is the building block of a digital payments and a fintech ecosystem. And Pakistan was a first mover when General Musharraf was ruling the country. Nadra came up with the ID program, and it was a case study of success around the world. Nadra exported its model to African countries as well. India, meanwhile, was a slow mover with the Aadhaar program and was, in a way, almost a decade behind. But today, when I look at the digital payments and fintech ecosystem, India is far, far ahead, even though it was a slow mover in digital ID, and Pakistan is now lagging. So, from your experience, and given that you're so deeply intertwined with this ecosystem, why is it that Pakistan's ecosystem sort of has lagged behind, even though it had the building blocks much, much earlier than a country like India?
So the national, or what I call the universal identifier, is one of the blocks of the enabling environment. It's not the only block, but it is a critical block. And it is true, we started well before India's Aadhaar card. And actually, initially, the fintech led revolution in terms of payments, which was driven by Easy Pesa and then by Jazz and then by some of the commercial banks, benefited hugely from the Nadra database because what we were able to do initially was obviously have a very robust KYC because we were able to access the Nadra database real time online. But more importantly, we convinced the central bank that if you, as you know, that all phones, people who hold a SIM card are biometrically verified. And as a consequence, we went to the State Bank and said, listen, we have biometric verification of the SIM card holder, and we can get NADRA verification real time online. And as a consequence, if you set certain transaction limits, we will not require a physical visit to the customer to come to the bank. And therefore, the level zero account came into play. And the 50 million wallets we have right now, which is equal to the amount of bank accounts that the commercial banks were able to create since the inception of Pakistan, came about as a result of the NADRA database. So we benefited hugely from NADRA database initially by those entities which had telco data as well, which were the two telco owned microfinance banks, and subsequently, obviously, commercial banks which already had access to NADRA database. But India did two things which Pakistan did not. India's Aadhaar card is on a piece of cardboard, and therefore the price of somebody getting an Aadhaar card is like 1/100th of what a computerized national identity card which Nadra provides. And Nadra's ambition was that the chip it has inside the card would hold a host of other information which would be resulting subsequently in Pakistan stacks like the India stack. So the vision was outstanding right from day one, but the execution lagged behind significantly. So Aadhaar card, based on the cardboard, but which also is biometrically verified, is the cost is a piece of cardboard. While the Nadra CNIC card is 150 rupees, and if you want an emergency, 500 rupees. So people will only convert to the CNIC as opposed to the NIC when the NIC expires. They're not, encouraged to move to the CNIC, and therefore they're not biometrically verified. So a lot of people who are the NIC just have a photograph, and you can get a photo verification, not a biometric verification. Secondly, Aadhaar views itself as a national utility. It's an enabler. It's not a profit center. Nadra views itself as a P&L, private limited company, which is although providing a service but must recover its cost. Therefore, the cost of Nadra verification ranges from 8 rupees offline to 75 rupees per transaction.
Mhm.
And therefore, many startups or many entities which want to use it are unable to do so because of the associated cost. So, one, the conversion rate from CNIC to from NIC to CNIC is slow. People don't do it unless they absolutely have to because of the cost that's required. Two, Nadra's view that it's a profit center and as opposed to a utility also causes the amount of access to Nadra is limited. Thirdly, Nadra only allows regulated entities to access its database on the offline or cheaper verification process. If you're a if you and I want to access a Nadra database right now, we'll have to pay 75 rupees a pop, which basically kills the underlying transaction.
Mm.
If I'm a payment facilitator, but I'm not regulated by the state bank, I can't go to Nadra. If I'm a SECP regulated entity, Nadra then imposes if my data is on cloud, Nadra won't allow me to access that data. So Nadra has a whole set of requirements to
Mm.
preserve the identity theft taking place or hacking taking place. Unlike India, which has created security measures, but any entity doesn't have to be a regulated entity can get access to the Aadhaar database at a fraction of the cost. So this is the reason why we started off well before India, the fintech ecosystem is not able to fully utilize the benefits of the CNIC.
That's very fascinating because, I think when I look at the Aadhaar program, for example, in India, it's not only just fintech, right? You have soil health cards, for example, of farmers that are linked to their Aadhaar database where fertilizer subsidies are handed out to them, where they can go and get their land parcel verified and know the status of their soil so that they are in real time told from the fertilizer business at the corner of their village how much fertilizer they need and what they need to invest in, etc. So from what I'm hearing from you is that that is not there in the Nadra ecosystem, and obviously the execution has not been. The idea was there, but the execution of that has not been there. From a perspective of where we are today, is there a recognition that things need to change and maybe some lessons need to be learned from the example of in India or other countries that maybe Nadra has to alter its operating model to further catalyze this type of change, or is this still a slow moving process from your perspective?
Well, central bank has tried several times in various forums to get NADRA. My view is NADRA verification cost should be 1 rupee a pop. It's a utility. You want financial inclusion. This is a railroad. But NADRA's view is very clear, and NADRA is owned by the Ministry of Interior, and it has its own board, that we're a profit center, that these banks make a ton of money, and therefore they should be able to pay not just our cost, but including a margin on top of that. So this is a struggle that I've been working, I've been trying to crack this problem for the last 10 years as a private sector, person working with the central bank and with NADRA. But I don't see a solution coming out, even though, we got to a stage where the NADRA chairman came in a forum, the central bank governor said this is something we want to do, went back to his board and they shot it down. So, that's where we are right now. Nadra has used some of the equivalent of what you're saying. When you're giving fertilizer subsidy, Nadra has played a very good part in the BISP payment plan, for example. This is one example where the government could use the BISP plan for beneficiary identification. So this is the equivalent of the fertilizer subsidy coming on. But let's say if Angro or Fauji Fertilizer wanted to do another verification, they would not be able to do except the manual 75 rupees of POP verification, which doesn't work.
Yeah.
So that's where the difference arises, that they only allow regulated entities. Why that's the case, I don't know. As long as they can create the security safeguards, anybody should be able to access the database to verify a certain individual, whether it's for a financial or non-financial transaction. I want to verify the two signatures on my agreement. I shouldn't have been forced to pay 75 rupees. I should be able to pay 1 rupee. I mean, if my database exists, I'm not finding out proprietary information. I'm just finding out that Nadeem Hussain says, this is his CNIC number, this is his picture. Does that exist in the database, or this is a fraudulent identity? That should be available to every citizen, and that should be open to another. Another should create security protocols and firewalls and whatever is required to preserve the quality of their data, so hacking doesn't take place. Shouldn't be limited to financial institutions, and that too only regulated by the central
And
bank.
just to quickly interrupt there, I mean, just a thought came up in my mind as you described that identity verification. That would be perfect for a country like Pakistan, where land records are a big issue and there is land parcels that are part of the black economy. If you mandate that all transactions have to be verified in real time by people through their biometric Nadra ID, you will almost instantaneously get a very good database of who owns land and who's transacting on these plots, so that the state can then look at it and say who's paying how much taxes, right? And the system is there on the back end. It's all about connecting it to the front
So
end of the
now,
user.
yeah, they're moving towards that in the sense that they're requiring a CNIC for most financial transactions, and certainly financial transactions above a limit, so that they're starting to get this database. I mean, we have dispersed databases. The issue with the land parcel, in my view, would be you need to digitize the land records first, because you're sitting on khatas, and if you digitalize them first, then obviously the ownership or transactions. Right now, if I buy a house, I need to give my CNIC card, and the seller needs to give the CNIC card. But nobody verifies them. We take a copy of the CNIC, and so if I have a fraudulent CNIC, I can give a copy of that. The verification isn't taking place because they're not enabled or allowed access to verify me real time.
Yeah, and I think that's where the opportunity lies. So, from your perspective and vantage point, what are some of the other things that you see either trending in the right or wrong direction in this space to promote financial inclusion and the overall fintech ecosystem in the country? Because obviously, there is growing interest from outside investors in Pakistan startup ecosystem writ large. Fintech around the world has been sort of a leader, particularly in the coronavirus pandemic age, where digital and touchless transactions have become more and more important. So, what's your overall read in terms of where the ecosystem is heading and the opportunities in it?
So coming back, before I get into that, what we need to enable ourselves to do is create more digital identifiers. So India has India's tax. Your university degree is accessible to anybody subject to your consent. Your birth certificate is available as part of your stack. You can transfer money through UPI based in and using the India's tax stuff. So there's nothing stopping Pakistan from creating Pakistan tax and putting the same level of identifiers into a digital locker based in Nadra. It already has a CNIC chip. The CNIC has a chip inside it. So they've asked people to pay for it, but the delivery hasn't taken place. Pakistan's tax would go a long way for digital identification and reduction of paperwork, and for verification of degrees, birth certificates, later on property documents or health certificates. But let's come back. Let's focus on the fintech, because that's the real focus of your conversation. So fintech is developing and developing fast, but the volume that we are seeing is very low compared to what it can be like in a neighboring country. Fintech in Pakistan are driven by five streams: payments, lending, saving, information. Okay, and I would include insurance in it as well. Remember, Pakistan is a cash society. We have 6.3 trillion or 20% of our GDP floating around in cash. Most transactions are done on cash. Digital transactions are, I would say, even less than 0.1% of where we are right now if we include all the physical cash transactions which are done. Why are cash transactions done versus physical transactions versus digital transactions? The biggest issue, the biggest use case typically in a country is digital acceptance of a payment at a mom and pop shop because that's the grocery. In a hierarchy of monthly expenditure, grocery comes right up there, followed by utilities, followed by rent, transportation, school fees. So as you start digitalizing the ability of the customer to make those payments digitally, you get more and more use cases in your mobile wallet. We have 50 million mobile wallets, but less than 10% are active. Active is defined as one transaction in 90 days, and that could be a airtime top up. So it's not really a financial transaction. So while we have managed to create 50 million wallets, which is a great step in the right direction, we haven't created the correct use cases in them. Our biggest use case is airtime, followed by P2P payments, followed by utility bill payments, and then maybe some P2G payments. But the what is India and why is Paytm worth 22 billion, $25 billion? Is because when they changed the currency, they basically went to a rickshaw wala, they went to a thele wala and said, put up a QR code because there's no money available. You have to now be able to accept digital transactions if you want to survive. Now
Yeah,
that was an
I
event.
was in India last year and we went to a chai wala and I was short on cash and he was like, sir, here a QR code, isko scan kar de and you can pay me. And I was like, I'm
So
not from India. I didn't have an Indian account and it was just seamless. I just paid straight to him.
yeah. So the point is that that ecosystem of there are 1.6 million general Kiryana mom and pop stores and the total transaction a month on a QR or a POS machine, that's a couple to 250,000 transactions, which is nothing. So the wallet providers are basically focusing on P2P payment, domestic remittance, utility bill payments, airtime payments. That ecosystem is still not created. And as a consequence, we are not seeing the adoption of digital at the bottom of the pyramid. So you have a segment of people who are now using apps. So I'm buying stuff from Daraz, I'll use a wallet. I'm making a utility bill payment, I'll use a wallet. So it's a segment of society which is more tech savvy, but it hasn't flown down. What went down because what Easy Paisa started was over the counter remittance domestically. That was at the bottom of the pyramid. People didn't use the Easy Paisa account because the whole they thought it's for the poor people who are doing domestic remittance. And Easy Paisa and Jazz together probably move 10% of Pakistan's GDP in a year, on those P2P payments. So there has been progress, but it's largely driven by the payment stream. The lending and saving, and should I'll talk about, is very little right now. But even in the payment stream, although we're seeing growth compared to what cash transactions are, I would say forget 1%, less than 1%, is digital. In most countries, the agenda for digital payments is driven by the government in many cases, where G2P and the P2G payments are done, the government encourages that. So, here we only have BISP, some, EOBI payments taking place. And in Punjab, we're seeing some P2G payments, but the government can mandate that all salaries of their civil servants, forget the minister, we can include that. Everybody's going to be paid digitally into a bank account. Why is there cash payment? Why is there check payment? The government can mandate that. Central bank can mandate it themselves, but they're not doing so. All challans should be paid digitally. Why not? So that impetus is missing. The Kriana store ecosystem is missing. And therefore, the payment which is taking place slowly and conversions are taking place. The second thing is remember that unlike India and Pakistan, fintechs are long on innovation, short on capital. Total amount of funding done by all fintechs combined, I would say definitely less than $100 million. Series B done by all startups in Pakistan, maybe two Series B. So we are doing basically pre-seed and seed. And pre-seed and seed, maybe you're lucky if you're hugely successful, maybe you'll do a $5 million round. Series A, maybe you've done a $10 million round. That's peanuts. A fintech cannot grow until it has, 50, $100 million kind of money to play with to create the ecosystem. So while we've seen people making a billion rupees of transactions in a month, that's great because it was zero before, but billion rupees is nothing. So one of our problems is that we don't have fintechs have not got to the chicken and egg. Fintechs have not got to the volume where they can attract 10, 20, 30, $40 million. And therefore, they're light on capital and they haven't done real partnerships with banks to be able to, and I'll come back to the challenges later on.
And just to
So
quickly
that,
put things in perspective for the listener, when you said a billion rupees in transactions, India alone in October of this year, under the UPI stack that you were referring to, the total amount of transactions was almost $51 billion. And again, India is a larger country, but even if you take into account the per capita transaction, it is much, much, much more than where Pakistan is. So for the
so
listener who
uh,
doesn't know the comparison, that it's just apples and oranges.
yeah. So Pakistan is going to probably launch the equivalent of UPI called the Micro Payment Gateway, led by the State Bank, where all 34 banks are going to be part of this system. And the bank is required within 6 seconds to be able to do a debit or credit. So you will be able to pull money, which doesn't exist right now, except for four or five banks which are integrated with a particular payment provider, and push money. Now that's going to be huge. That's like then saying, I can do a payment on WhatsApp, I can do a payment on Messenger. If somebody is using any messaging, medium, I can be able to pay on that. Now that's going to be a game changer in my view, as far as payments are concerned. Pakistan, from a regulatory perspective, is also very well placed. State Bank came up with a regulation called EMI, electronic money, institution, I think, or something like that, which allows a non-financial institutions to have a wallet. Previously, in order to get a PSO, payment service, operator, payment service provider, PSP license, you had to be a financial institution. So a fintech like a Baikia or a Daraz or a Uber who wanted to create a wallet couldn't do so. But the central bank then gave them opportunity with a $2 million license. You can get an AMI, license, which allows you to have an open loop wallet. So you can then put multiple use cases in your wallet. Money is in an escrow account with a bank because they can't take your fiduciary risk. But for $2 million, you can obtain that. So there are about 10 EMI players which have recently, been given these licenses. So that's definite progress. But if I put all of them together, I still say that transactions they do vis-a-vis the transactions that commercial banks do is a fraction. But it's starting to get there. So, let's say 5 years ago, it was nothing. Now it's clearly getting in the right direction. So talk about fintech, then you come into lending. If you look at India, there are probably 50 lenders, digital lenders, lending based on your smartphone, lending to students, lending to merchants, lending to build discount players. So we have maybe five players doing this only in Pakistan. Total consumer bank lending to number of people is less than 2 million people. Total number of data points in the credit bureau is less than 10 million. Most of our people are new to the industry. Merchant lending, the SME lending, used to be 17% of total lending, but it's now down to 7%. Huge opportunity. But in order to do this, you need capital. Banks in Pakistan are not going to drive it because their main earnings comes from investment in treasury bills and government securities. So they haven't invented since the earth cooled and they're not planning to. They're not pushed. Fintechs want to do this, but fintechs don't have the capital. And in order to even partner with the bank, you need to do enough piloting to show that your default rate is down to an extent where the bank is willing to share their balance sheet. Some people are coming up, they're devising stuff. maybe the total number of loans is 500,000 right now, which is not bad, but it's nothing because this is a 30 million people market. Out of 220 million, at least 30 to 40 million can be eligible for digital lending. So we are very, very nascent as far as digital lending is concerned. Then you get into savings. The official saving rate in Pakistan as a percentage of GDP is in single digits, 5 to 6%. And banks trip over each other to get people's deposits coming in because their whole play is cheap deposits and use the arbitrage to lend to government securities, which has no allocation of capital. That's why banks in Pakistan are hugely, hugely profitable. But they operate more like asset managers than like banks because the total number of lending they've done to customers is less than 2 million in a country of 220 million. But Pakistanis save, but they don't want to save in bank accounts. And coming back, in any of these, tax, getting caught in the tax net is a huge concern of both individuals and Kriana store owners. So when you say I want to get the Kriana store owner into the digital net, one of his concern is, if I get into this net, will I have CBR knocking on my FBR knocking on my door? And I say, where's your corporate income tax now? So that's something that's a challenge. Pakistani save, I told you 6.2 trillion rupees in the system floating around. They do committees, which are Roscas, which are retorting saving accounts. And everybody is doing that. And the banks and or fintechs are looking to figure out a way to institutionalize that to the extent that it can. You can create a platform where people, instead of exchanging cash, can still exchange money, but through their wallets as opposed to cash, and make it easier for them to do so as opposed to sit down. Now, there are various kind of committees. Some of those committees are social committees, so people want to be able to have tea and gossip. They're not going to be part of this system, but there are other parts which can hugely. So we haven't addressed the solutions from the customer lens. We've addressed the solutions from the product lens of a provider like a commercial bank. Pakistani save in gold. $25 million is the worth of gold imports every year. 99% is ornaments. Why can't we create a fractional gold product which allows them to save in gold for 100 rupees, transparent with the pricing, liquid so that it's a buy offer spread, and secure because it's regulated? So now fintechs are starting to develop solutions which are looking at the customer lens and the customer journey. It takes a person which is new to the industry in Pakistan 1 month to get a credit card and typically 10 days to open a bank account if it's a normal level 1 bank account as to a level 0 bank account. This customer journeys is really convoluted. You want to win the confidence. Many people have more trust in telcos than a bank, because they buy airtime from telcos in advance, but they don't want to put their money in a bank.
And this is just insane. Like, I moved to the United States as a student in 2007. No credit history, no bank account, no cell phone account. And day one, I went with three of my friends who were also students from abroad. We went to a telecom shop, and he was like, "You need to have a credit card because you can't transact on cash to get a monthly recurring payment account with your phone." And I was like, "Well, what do we do?" He's like, "There's a bank next door, just go there." Within a 3 hour cycle, we came out from the bank account with a bank account with no deposit, nothing. It was approved instantaneously. A temporary credit card that was a debit card, not a credit card, that was used at the next door phone shop to get a phone. And that was how this credit journey began. And it was just 3 hours. So I just find it insane that someone has to wait 10 days to a month to just enter the financial system in Pakistan. So
So,
my question to you is, why is that the case?
so what I'm saying is that's the case with commercial banks. So there are fintechs which will give you up to 5,000 rupees in under 10 minutes based on your smartphone data. If you're willing to share your smartphone data, they can approve between 1,000 and 5,000 rupees under a minute and push your money into a wallet if it exists under 10 minutes. So this is the new emerging ecosystem arising. A level 0 account, unlike the US, can be opened in under a minute by just texting your CNIC card to a predefined number, star 786 hash, and then your CNIC number, and you can get a level 0 account open in a minute. So we've got those. but the use cases on those are not built up. Now, in credit card, I agree with you because we don't have a scoring system. Now, when you went to the US, they gave you a debit card, not a credit card, because they couldn't find a score. You didn't have a FICO score. I told you in the credit bureau, we only have 10 million people. So we only have data points on 10 million people. Pakistan is a country of 220 million people. We have a median age of 22, that 50% of people are under 22. So now the opportunity exists for somebody to create a FICO score equivalent using alternative data points. Huge opportunity. If I can demonstrate that I have a credit score with reasonable default predictors, I can be the utility, and people are looking, for the rest of the industry to come and check with me. Mr. XYZ is not in the banking system, but does he have a credit score based on alternative scoring, which is smartphone data, utility bill data, e-commerce purchases. So those are all people who are doing that because e-commerce is 90% COD. You can capture that, but you need to be able to put all that system together. That's happening. What I'm saying is all that stuff is happening. So you have a huge dichotomy. You can take 1 month to open a credit card, get a credit card, or you can get it in 10 minutes. Limit is low, but you can get it. You can take 1 minute or 2 minutes to open a bank account, or you can take 8 to 10 days. So we need to streamline the 8 to 10 day system to bring it down to an hour or 10 minutes. I was with a bank the other day and I said, how long does it take you to open a individual bank account? So we have to do PEPs, because Pakistan is on the FATF grey list. So there is a big concern about the KYC, AML. And they said, if you can come down to 1 day, it's huge. I said, your ambition should be 10 minutes. It should be minutes, not hours, not days. And that is doable. It's a question of how do you automate and link your NADRA verification process or your PEP verification process. And you should be able to do it in 10 minutes. It's doable because largely lot of the ecosystem exists. Just haven't put the technology to do it. And that's where the opportunity lies. Pakistan is why are people coming to Pakistan right now? Because there is so much disruption that can take place, and there is scale that is available, and the unit economics suggests that you can monetize this. That's why if you look at people now, they look at India, the valuations are hitting sky high. We are nowhere close to that. You look at Indonesia, now the valuations are hitting sky high. Big country. We are a huge country where the valuations are still in a very early stage. So that's why VCs are starting to look at Pakistan because they're finding Indonesia or India too pricey. I'm not saying they're stopping there, but at a seed level, Pakistan's a better play in my view because our valuations are low and the upside is huge if you get it right.
So so let's talk a bit about the government perspective, right? Because when we look at what the government can do to even catalyze, let's say, the growth of a credit scoring system, you talked about it that start paying people digitally, and then odds are that they may use those same wallets to do their utility bill payments, to do their basic transactions on a day-to-day basis that builds a credit score. What are some other things where you think there's an opportunity for the government to lean in and do a bit more to accelerate this disruption that is taking place almost organically in the ecosystem right now?
So my view is the more the government stays out of this, the better off we are. Because the government lens brings a very bureaucratic lens. Although this Russian digital accounts is a huge step. Previously, Pakistani diaspora outside Pakistan, if they wanted to open a bank account in Pakistan, had to be physically present. If they wanted to invest in T-bills, if they invested in, the AU, asset management company, they couldn't do so. So the government, did a huge. So this is I really recognize the government between the government, and the state bank. They came up with this Russian digital account where Pakistani diaspora can now digitally open accounts with 8 banks or 6 banks, which have the first wave of banks electronically, digitally. So you can be sitting in Amsterdam, New York, wherever you are. You can get onto the 6 banks, and you need a CNIC, Pakistani passport, or NICOP to determine that you are diaspora. And then you can open an account electronically, relatively short period of time. You can scan and upload these documents, fill in the account opening form electronically, and then they've created whole use cases. So that's a great step. for this digital diaspora who have parents over here for whom you need to make utility bill payments, or you want to invest in the Pakistan dollar-based certificates, which are 5-6% versus 0.5% outside. So that's one of the examples where the government has done a great job. If you look at the government's plan, it has a great plan. Execution from the government side is very, very slow. I mean, there are many things on their plate. They talk about digital Pakistan, but the actual execution, where financial services is one part of digital Pakistan, there's ed tech, there's health tech, there's agri tech, all of that can be brought into this digital umbrella. It's slow. And, and in a country of 220 million, these things take time. But we are lucky to have two very progressive regulators, which is the State Bank of Pakistan and the SECP. Both of them are constantly coming up with enabling regulations which are assisting startups, whether it's a fintech startup, and the CCP now is a regulatory sandbox. They're talking about a digital insurance company license. They're talking about potentially equity crowdfunding, which we've been asking for a very long time. So those things are starting. So I'm very, very, I've invested everything in Pakistan because I see this is where the big opportunity is. Now there are challenges. Doesn't mean that you have a ennobling environment you can immediately get going. But if you come in now, I think you have a huge opportunity to create serious valuation, social impact, and scale.
So from a government or just an overall perspective, and this, I would like to conclude the conversation here as well. One of the things that I always speak about is this idea that you had digital Pakistan and this idea of improving what I define as product Pakistan, and that comes with the brand Pakistan as well. It raises the profile of the country, so investors in Indonesia, India, where valuations are sky high, look towards Pakistan and say, well, there is a better opportunity there, or relatively better opportunity due to valuations. But then you have moves that occur where apps are banned, or where we recently saw the offices of Jazz that were sealed. How do you see this dichotomy play out in terms of, where the ecosystem is growing, but then other arms of the state take actions that sort of create headwinds where in fact, they should be creating tailwinds for you guys?
Totally agree. These are self-inflicted wounds. These are things that you couldn't know. There's a Urdu sher which says, "Mera azm itna buland hai कि पराए शोलों का डर नहीं." I'm not scared of people outside, damaging me. It's my own, within me, a despair. I'm going to create all my damage. That means, sealing Jazz's office while the CEO had met finance minister and the FBR chairman 2 days before. And before he even got back to his head office, you seal them and give them half an hour notice to pay up $150 million. What was the message? Beyond me, what was the message? Immense damage in the private sector, immense damage globally. You know about it, 10 other people know about it. Jazz has invested $12 million in Pakistan, one of the highest taxpayer. Okay, if they haven't paid, figure a way out. Okay, and it's a disputed interpretation of something. So there's a better way than sealing the system. That hasn't led to Jazz paying their money immediately. They're still disputing it. They're still in court. So what was the purpose? So these are self-inflicted wounds. I don't know what the motivation was. Banning TikTok. TikTok has 24 million users, and they have 150 people curating the content. It's not a live upload. It goes through the content curation. So anything which is suggestive or beyond that gets, taken out. So why ban something that also for 8 days? Again, YouTube was banned for 3 years. I don't know what it was, but YouTube has content which you can dispute, which are seriously against the values that we had, when they were talking about jokes with the Prophet Muhammad and other things. But TikTok doesn't do any of that. So these are self-inflicted wounds. Don't know what the motivations are. They get corrected, and then all you've done is put a red flag up that this is inconsistent policy, and this could happen to anybody. If it could happen to Jazz, can happen to anybody. It can happen to TikTok, which is owned by a Chinese company, which is Pakistan's closest, friend as far as countries goes. It could happen to anybody. So you just create uncertainty, and the 2 steps you've taken forward, you take 3 steps back. But despite all that, I think there's still huge opportunity. That's things when you're in an emerging market, things like this happen. I mean, in India, the Telenor license got cancelled. They lost 10 billion, I don't know how many billions of dollars because they said the sequence with which you come through that was tainted. So things like that happen in emerging markets, and you're going to take them in your stride. You wish they didn't happen, but they will happen. And that's part of your business planning is that something like that may happen, but I can still scale, I can still get impact, I can still create a huge valuation.
Last question for you in the next, let's say, 3 to 4 years. We've talked about use cases and having use cases designed from the consumer's perspective. What's a use case that you would like to see in Pakistan 3 years from now that would, give you sort of the satisfaction of saying Pakistan's fintech ecosystem has come a long way, where a huge consumer need is now being met that was not being met at this point in time?
I want to three big use cases. I want to be able to see companies provide a $100 to $50 loan under 1 minute using alternative data scores instantly to a person who's not in the formal financial system. Being done all over the world, we can do it here. That will result to him being part of the financial system and creating a credit history. Can be done. For me, if we have 10, 20 million customers who've received money like that, huge. I want to see saving apps because Pakistan, the saving that's taking place is outside the banking system. Whether it's a committee solution, a fractional gold solution, or fractional animal husbandry solution. I want to see solutions like that which start bringing the bulk of Pakistanis in the financial system because you're creating solutions, they create their needs. I want to see open banking in Pakistan regulations so that the data that resides with telcos and banks, who are repositories of this data, not the owners of this data, made available on customer consent to a third party so they can use their data to enable the first two things I talked about. If we can see those things, I think we are going to see serious traction. Financial inclusion, the numbers we're talking about, this 2 million lending number could be a 20 million lending number. The saving numbers could be 50 million people. That's when you say, 25, 30, 40% of the population are being driven by fintech. That's when you get unicorns. That's when you get people who say, okay, this is a country where you can get serious valuations happening. Not the way we are right now, but we're in the right direction, but we're not there yet.
I think those would be fascinating solutions, Nadeem Saab, because, from a macro, I'll sort of zoom out from your perspective as well. If you achieve those outcomes and you formalize the economy and financial services in the economy and bring the bulk of your population into the system, you can actually start meeting Pakistan's investment needs through domestic savings, which has been a major, major issue for the country, which is why we continue to have current account deficits that then lead Pakistan to go to the IMF or to the Chinese or to the Saudi Arabians for loans. And if you bring Pakistani savings into the system, then those savings can be deployed to meet the investment needs of Pakistanis themselves through their own money. And I think that would be
Remember,
transformative for the economy.
absolutely, banks, as you know, have a multiplier effect. You bring in 1 rupee, you can lend 3 rupees. So you not only start taking care of the funding needs where you don't have to borrow, but you also can start lending a lot more. So the bank's ability to lend changes. And this is money which is in the system. So it's really an issue of how do you bring that in from a customer lens, make do what the customer wants, not another checking account with three free, checkbooks and four free transactions at the ATM and another 0.5% uptake on a saving rate. That's not what your bulk customer wants. Okay, thank you very much. Pleasure talking to
Thank
you.
you so much. This was great. Appreciate you taking out the time, and we'll be in touch. Thank you. Have a great rest of the day.
Cheers. The office.